All right, so there are three types of market structure. Sorry, let's this one. So with the three types of market structure, we have first number one, the swing structure. All right, there are three types: the swing structure, followed by the substructure, followed by the minor structure. So this is where we will be ending today. So our major focus actually for we here is the swing structure. All right, three types of market structure: the swing structure, the substructure, and the minor structure. What do we mean by a swing structure? All right, remember when price is moved. Okay, let's come. Okay, so remember when we were talking about supply and demand zone and how price moves or how the market behaves, say, moving from one zone to the other. Yeah, so this is an example of a trendy market. You're having higher highs and higher lows. So this is a demand zone 1, another demand zone 2. This is a supply zone, but it's a weak zone because it has been taken out by this demand zone. All right, so this is the trendy market. This is another supply zone, but it's a weak zone because it was also taken out by this demand zone. All right, okay, so price moves from one zone to the other. All right, if it breaks out another the opposite zone, it's telling you whether it's bearish or it's bullish. So now that's a trendy market. So let's just look at the default system. So this is when we talk about a swing structure. This is a swing structure, right? This is a supply. Okay, that I'll ask you guys the next time what kind of zone this is. So this is a supply zone. All right, so what are we expecting? That price will come here, then we sell from here, right? Okay, so what we are seeing currently is our swing structure. This is our swing structure. This is our swing structure. What are we seeing? In our swing structure, we realize that this supply zone right here takes out the opposite demand zone. That's what we have realized. So we call this a BOS, that is a break of structure. A break of structure. Break of structure. All right, that's what we call this right here. That's what has happened. A break of structure. In short, it's called a BOS. Okay, BOS, a break of structure. So whenever you see break of structure, a BOS, it means break of structure. All right. Right. So that is what happened. That's what has happened. So this is what we call this whole thing you're seeing here is what we call a swing structure. Remember, we are under the types of market, the three types of market structure, right? So this is a swing structure. Swing structure. Okay, let's increase our font size. Yeah, so this is a string. You can have it this way, or you can have it this way. What has happened? You're seeing a break of structure right here. Okay, a break of structure right here. So this is a string structure. So for this one, so what are we waiting for? What do we want to see? What do we want to see? We are waiting for price to come back now here so that we can buy. All right, so that we can buy. Great. So this is a string structure. That's what we are focusing on. However, what happens is that after this swing structure, right, we are waiting for price to come back. So that reversal down here is what we call, you see price do something like this, something like that. Wow, forgive my caricature. Okay, so you see price behaving this way. So that is called a substructure, right? It is happening within the confines of the swing structure. Oh, it is happening within the confines of this swing structure. It's happening. So this is called the substructure. Let's label it. So this is a substructure, alright? So this is happening as a substructure. This is the swing structure. Then finally, when price comes here and buys from here, right? Or when it comes here, so this is our, for the sell side, right? The bearish market, this is our substructure, okay? And finally, when price gets here to sell from here, this we are seeing here is our, this one here is our minor structure. Minor, please. So that's our minor structure, right? Minor structure right here. So this is everything you're seeing here is a swing structure. All right, so swing structure 1 here, then we have 2 here. So when you see a break of structure, all right, and when you see this, what we have here is a swing structure. This whole thing here is a swing structure. What is qualifying it? We first of all got a sweep here and a break of market structure. So this is where, for this one, is a bullish sign, right? So this is where the buying from. So we have a sweep there and a break of structure, a BUS right here. Please, are you following? Are you getting it? You know what a swing structure is. Give me a thumbs up if you are getting it. Great. So if I'm seeing just 2, the rest, are you alive? Are you here? All right. So this happens. So this is a swing structure that happens right there. Well, if you see price reversing, the reversal we are seeing, that's a minor structure. So that's a substructure. Then the main place where we are buying from, or if it's the opposite where we are selling from, that is the minor structure. So this is over here. We are having our substructure here, then our minor structure here. All right. So let's have that in mind. But we are focusing on our swing setup or our swing structure. What do I mean by that? What we are looking out for, right? What we are looking out for is that basically what they taught us. That's where I want you to pay real close attention. What they taught us is that give me a minute, let me get this part over. It's not supposed to be doing that one. Let's move on. What they taught us was that once price goes, we get a swing structure, right? Once price reaches this, what we are looking for in the basic market structure, right? In the basic market structure, what they taught us is that we wait for price to come to this place, then we buy. All right, that's what they tell us. So wait for price to come there, then we buy. Like I said, so this is a demand zone. If it's a supply zone, you see a swing structure form here. We wait for price to come here and we sell. Why? Because that is our strong zone. So we are seeing a break of structure here, all right, a BUS here. So we have been told that, oh, when price comes down, when price goes up, you sell. When price comes down, you buy. So you look for a break of structure here to the upside, and you come, then you sell. And sorry, you buy from here. That's what we are taught in basic market structure, or what you've been seeing on the internet and all that, or you sell from here. And this is our strong supply zone, and this is our strong demand zone. However, that is 80% of the time not the case. You see, what you realize is that price gives us our swing structure, right? Then takes out this opposite zone right here, right? It sweeps it out before it finally moves down. So if you were taking a trade from here, right? Because here it's my swing setup, okay? It's my strong zone. So I am putting marking my zone here. I'm waiting for price to come so that I take a sell from here. What you realize is that you will be taken out. So 80% of the time you get taken out before the actual sell happens. Or if it's a buy, you'll be taken out before the actual buy happens. Meanwhile, you have positioned yourself right here for the buy. All right, so it's important that you get this. So you have to be able to validate your structure. All right, you have to be able to validate your structure. And to validate your structure, you have to look for 3 things. The first thing is you find your sweep, right? You make sure that the sweep has first of all happened. Then you look for structural liquidity. I will explain all that. So there are types of liquidity. All right, there are types of liquidity. I don't know why there are types of liquidity. So we are moving a bit further into the soup. Okay, so stay at the right side of the soup. So you realize that this would have been your swing structure right here, right? A break of structure. You would have waited for price to come here to buy from, but unfortunately for you, this thing happens and it will take you out. So what I'm letting you know is that first of all, you look for the sweep. Hold on, great. You look for sweep of liquidity. right? A sweep right here, then a BOS here. There will be a BOS right here. So first, let's mark it here. You see this, that's for the buys. You see this sweep of liquidity, there's a BOS, so price will come and sweep it, create structural liquidity. Then let's go to the chart examples and see. We're actually at the chart examples. Okay, so let's see. This is Euro USD. Okay, on the weekly. Okay, let's look at GBP USD. All right, GBP USD. I hope you're all here. All right, so GBP USD. All right, let's look at this. Let's start from the daily. So imagine you are taking a buy position from here. All right, it qualifies. It qualifies for that trade, because what are we seeing? We are seeing a break of structure here, another break of structure here. Now what normally happens is this. Are you all seeing it? Are you all seeing that? So imagine you were taking your you've marked out this place. Okay, so I'm going to enter from here. Then your village people will be looking at you and be smiling at you. So brother, today we are going with you, taking your position here, because you'll be told to mark out, then cover the other low. All right, so this will be your demand zone, because that's taking out these other zones. So you are waiting for price to come down, then boom, but price will take you out before the actual move, which is here, happens. All right, let's see another chart example. So I need you to take note of. Oh, I've gone too far. I've gone too far. Other chart examples you can see here, because we are on the daily, right? You can see here. This is a nice strong zone. What happens? Price goes up. Supposed to come down for you to buy from here, according to what you were taught in the basic market structure. Now you see that it takes you out first, then the real buy happens. All right. There are several examples, several of them. In many. Let's look at this one from the 4 hour. Okay. Let's see if we get it here. Okay, so you can even see it from here. Price will take you out first, alright? Price will take, if you go on the lower time frame, you will have seen that there is a BOS here. For the sake of time, alright? There will be a BOS here, a break of structure here. So you are expecting the price will come down here for you to buy from here. But price takes you out first, then the actual buy happens from here, alright? Happens from here. So it goes on and on and on and on and on. So now, what are we saying? We are saying that for basic market structure, it doesn't really happen, or what we were told doesn't really happen in real life. That's why we are learning algo structure, all right? ALGO. So what does it say? It says for us to, first of all, partake in the market, we first have to find our, number one, sweep of liquidity here, meaning this liquidity, something we call the structural liquidity, then a break of structure. This is our break of structure right here. Now what happens? We then take our position here for a buy. Then boom, this happens. Happens all the time. Let's go back. For the sake of time, let's jump straight to the weekly. What happened on the weekly? You can see right here, this zone I marked right here. It's a strong zone. It took out this opposite zone right here. Right? So we would have been expecting that price will come down here, then we buy from here. But no, it doesn't happen. It takes you out, then it buys from here, the POI. So what happens is swing structure happens, market takes it out. That's a sweep of liquidity. The first of all, the sweep, there's what we call the structural liquidity, the break of structure, then back here. Sorry, I marked the wrong one. Then back here. So you see, we have it here. Our break of structure happens right here. This is on the weekly, so the candles are huge. Please, are you getting it? We can, along the line, we'll be looking at several examples. Let me show you some of the trades I took. Some of the trades that I took. Yeah. AUD, Let's see from the daily time frame. So you can see these two trades right here, right? Oh, you realize. Let's start it from. Okay, let's look at these visible ones. All right, let me take this one. Where did you come from? So you would see that there is a break of structure here, right? I hope you're all seeing. Kindly give me a thumbs up if you are seeing. Right. So there's a break of structure here. Instead of price to act from here, that is to buy from this same zone here, it doesn't happen. Instead, we get a reversal back here. It takes away, there's a sweep of this liquidity here, right? So this whole zone, in a minute, let me take it away from there, right? So let me take this one away from there. So you would realize that let me use, probably that one would have been a bit complex, so let me use this model here. So you would realize that there is a sweep of liquidity here, right? Meaning that price has taken out this previous low right here. There's been a sweep of liquidity. Okay, now a break of structure takes place here, and we have for ourselves what we call a transactional liquidity. So where we are going to buy from is here. Then boom, this happens. We took the buy from here. All right, we took the buy from here. So let's just look at this last one here. Oh, don't want me to choose a plan? Can't choose a plan now. All right, so let's look at this last one from here. So the same thing we are seeing. It's even happened multiple times around here, but let's focus here. So we have this price sweeps this low, gives us a break of structure up here, then comes back down here to buy from. All right, so we can take our trade from here. It happens this happens over 80% to 90% of the time. 80 to 90% of the time. So 80 to 90% of the time, you will see this happen in the market. All right, you see this happen in the market. Now let's remain at the basics. All right, so what I just did was a bit complex. So sweep of liquidity, structural liquidity given to us here, then we wait, then we take our position here, and that is where price comes to react from. That's where we take our buys from. What did we get? We got our beautiful sweep of this liquidity right here. We got our break of structure 1, our structural liquidity here, second break of structure, then finally price comes back down here at our red zone that we've marked here and buys. Please comment if you understand what I'm showing you. I think there's the part where you ask questions. If you are having any questions, kindly let me know. Type your questions and let's answer them. So basically, this is what we are looking for in the market. All right, this is what we are looking for in the market. Of course, there are some confirmations that we will use. All right, but this is basically what we are looking for in the market: a sweep of the previous low, a break of structure, structural liquidity, and you wait for the structural liquidity to be taken out, then you buy. All right, this is the structural liquidity taken out, then you buy. Our position will be held here. Position will be held here. If you are selling, a sweep of this low, break of structure, structural liquidity, then a sell. So our position held here. Do you get it? So this is our structural liquidity. It happens 80 to 95% of the time. The remaining 15 is when you get this, right? You get a sweep, you get a break of structure, then price will leave you alone. It will go far, then later after some days or comes back to react still But let's say if your interest was short term, the price leaving you and not coming back at that point is what we look at for the 15%. But 85% of the time, this is what happens. Those who rely on the basic market structure get induced. When we talk about inducement, it happens when there is no structural liquidity. All right, we'll talk about it in the next session. All right, so if you are waiting to buy from here, you get induced. All right, you get induced. So you'll be used for this before this comes in for a buy. All right. Okay, so let's take the questions. Let's take the questions if there are any.